Commodities are surging, up nearly 2% this week, with extremely overbought conditions. A potential correction looms, driven by supply chain disruptions. This is what every serious investor needs to know about commodities right now. Stay with me. Welcome back, or welcome if you are new to Financial Market Oracle. As we begin this deep dive into the commodities sector for the week of March 16th to March 20th, 2026, it is essential to consider the overall market context. The VIX is currently at 26.8, indicating an elevated uncertainty regime, which is likely to influence investor decisions across various asset classes. In this environment, the commodities sector stands out, particularly when compared to the S&P 500. The sector ETF, GSG, has demonstrated notable resilience, posting a gain of 1.93%. This outperformance warrants attention, as commodities often serve as a hedge against broader market volatility. Furthermore, given the ongoing geopolitical tensions and supply chain disruptions, the sector's fundamentals are poised to remain supportive. As we navigate this complex landscape, understanding the commodities sector's dynamics is crucial for strategic positioning. Please keep in mind that this is educational content and not financial advice. Let us start with the technical picture and what the charts are telling us. The commodities sector, as represented by the GSG ETF, has shown significant momentum, with a weekly gain of 1.93% and a monthly increase of 23.81%. The Relative Strength Index, or RSI, is currently at 81, indicating an overbought condition, which suggests that the sector may be due for a period of consolidation or a potential pullback. This RSI reading implies that the recent upward move may have been overextended, and a correction could be on the horizon. The trend direction remains upward, however, with conviction, as the sector continues to build on its recent gains. Key support and resistance levels are likely to be tested in the coming days, which could provide insight into the sustainability of this breakout. The current move does appear to be a sustainable breakout, but the overbought condition does introduce some risk, and a period of consolidation may be necessary to digest these gains. A technical setup worth watching this week is the potential for a retest of the recent highs, which could indicate whether this move has further room to run or if a more significant correction is looming. Now let us look at the fundamental catalysts driving this sector. The commodities sector, comprised of key components such as gold, silver, oil, and agriculture, is facing a complex landscape, with general macro conditions presenting both tailwinds and headwinds for the week of March 16th to March 20th, 2026. Elevated uncertainty, as reflected by a VIX of 26.8, is a significant factor influencing market dynamics. The key stocks, including GLD, SLV, USO, corn, and WEAT, are closely watched for signals about sector health, and their recent performance indicates a mixed outlook. This week, the focus will be on earnings reports from major players in the sector, as well as regulatory news and macro data that could potentially move the sector. The longer-term fundamental thesis for being positioned in the commodities space is underpinned by the ongoing demand and supply imbalances, particularly in the oil and agriculture segments. With the global economy navigating through a period of heightened uncertainty, the commodities sector is likely to remain volatile, making it essential for investors to be attuned to the underlying drivers. The macroeconomic environment, coupled with the earnings season and regulatory updates, will provide crucial insights into the sector's health and potential trajectory. As investors, it is essential to consider these factors and the overall market regime when assessing the commodities sector. Please remember that this is educational content and not financial advice. Next, let us talk about the specific risks you need to manage this week. The commodities sector is facing several key risks this week, including supply chain disruptions and geopolitical tensions, which could significantly impact prices. Additionally, a strong US dollar poses a risk to commodity prices, as it makes them more expensive for foreign buyers. Given the current volatility environment, with the VIX at 26.8, it's essential to think carefully about position sizing and consider scaling back exposure to mitigate potential losses. Unexpected headwinds, such as weather events or unexpected changes in government policies, could also impact commodity prices. To manage downside exposure, a disciplined framework is crucial, including stop-loss orders and regular portfolio rebalancing. This approach can help mitigate potential losses and ensure that investments remain aligned with overall risk tolerance. And now for the strategic outlook, where does commodities stand heading into next week? This week we maintain a bullish strategic positioning in commodities, driven by rising demand and supply chain constraints. A key theme to track is the ongoing geopolitical tensions, which may further boost prices.
Remember, this is educational content and not financial advice.
If you found this video insightful, please like, subscribe to Financial Market Oracle, and comment your commodities watch list below.
Until next week, stay informed, stay disciplined, and stay profitable.
Cheers!
This video is for educational and entertainment purposes only and does not constitute financial advice.
Always do your own research before making any investment decisions.
Past performance is not indicative of future results.